also spiking up. Mayuresh Joshi joins in. Mayuresh, good afternoon and thanks for joining in. One stock that has been on a big uptrend ever since its numbers is Bajaj Finserv. Even today, that stock is up almost 4%, and now from the lows of around 2,500 that it hit in December, it's back to almost 3,700. Is there still more scope on the upside here?
Afternoon, Sonia. Again, I think the argument always has been that the valuations have been stretched for a company like Bajaj Finserv as well as Bajaj Finance for that matter. But largely, again, I think if you look at the kind of business pedigree that these stocks have, the kind of products and the kind of numbers that they put through, my own sense is that the management confidence in these companies post their numbers and in the transcript have been extremely robust. Secondly, demonetization after effects, I think, were not so evident in a lot of stocks, including the consumer discretionary and consumer-facing stocks, including Bajaj Finance, Bajaj Finserv, and the collection efficiencies have grown significantly in the last 1 month. Having said that, I think the valuations have always remained stretched, but largely, again, I think it's a very qualitative franchise. So again, my opinion is that if you're holding on to stocks like a Bajaj Finserv, Bajaj Finance, you should continue holding on to these stocks.
Okay, we'll take a break on that note. News that once again it's about individual stocks, so many stocks surging. Sonia pointed out to Crompton Greaves, that actually has to be your stock of the moment now, up 5%. We'll discuss that and a lot of other stocks once we come back from the break. Also, our coverage from the ICICI Securities conference, which is underway in Singapore, will also continue. We'll be joined by Jaideep Goswami, Head of Institutional Equities at ICICI Securities.
Hi guys, welcome back. Well, it's a roaring market actually, so it's really looking good. I mean, the stock that's surging now is Bajaj Finserv, as we told you before the break. In fact, talking about that space, the NBFC space, Ujjivan Small Finance Bank has officially started services with 5 branches and a customer base of 35 lakhs. So finally, the Small Finance Bank is here. Our correspondent Rukmini Rao caught up with Samit Ghosh, the MD and CEO of Ujjivan Small Finance Bank, and began by asking when they plan to roll out the 400 branches.
Today we are starting with 5 branches in which we are piloting this month. Next month we will roll out another 10, and then over the course, before the end of the financial year, we'll have rolled out all the 457 branches and also open the 66 unbanked rural branches.
Sure. Also in terms of the fixed deposits, the interest.
Okay, Jubilant Foods numbers are flashing on the screen. Net profit at 20 crore is in line with the estimate. Now, estimate was 17.4 crore, compares to 31.75 crore for same quarter last year. So maybe a smidge above the estimate. If you look at the sales number as well, that will also flash on your screen because that's coming at 658.
Yeah, so that's in line with expectation. 652 was the expectation. It's coming at 658, which is a growth of around 3.9%.
Yeah, I guess the number to watch now would be the same store sales growth number or degrowth in case of Jubilant Foodworks, because expectation is that it will come in at -5%. But the stock is surging, in fact, at this point in time. It's been up since morning, but it's a case of maybe smashed up expectation. The expectation was really halving of profit.
Yeah. And no shocker, perhaps. I guess that's something that the street has been liking this time.
Yeah, exactly. In the wake of demonetization, EBITDA as well actually has beaten estimate a bit. Now, not by much, but 58 crore going to 64 crore, and the EBITDA margin of 9.7% versus CNBC TV 18 poll of 9%. Mr. Hussain, I know this is a stock that you don't like, but because of valuations, of course. But your first thoughts on the numbers?
See, Anuj, you have said right that it is purely the valuation, because if you see 20 crore PAT means EPS of 3 rupees 3 paise for the quarter. I agree that the street has been expecting it to be lower because of the demonetization effect and all that. But if you really see the situation going forward, because I have never taken a quarter call on this stock. In fact, in the past also I've only said that the growth is missing if I take a longer term horizon. If I take the situation in last 3 years or 4 years when they have crossed the 1,000 stores, maybe about 500 about 4 years back, you have not seen the bottom line, getting ramped up. And if you that means that amounts to the pressure on the margin. So I won't be taking that situation that if you have an expected EPS of 12, 13, 14, then and buying the share at 1,000 rupees, I won't be comfortable. But yes, because of the strong institutional holding, the stock is always seen holding and bouncing back from the lower level as well. So purely because the growth is not seen coming into the stock, I have never taken a comforting view. Yeah.
Okay, well, for now the stock is really surging. It's more a case of no bad news that the market is seeing a bit of a relief rally here. The numbers are, I think, great to write home about. A 3.9% top line growth. The profits have actually fallen by 32%, but not as bad as the street was expecting. And the EBITDA is also in line with estimates. We're waiting for same store sales growth. It has been, in about low single digits to a negative growth of 5%, a fall of 5% that we saw as well, that we're expecting this time. So let's see what it delivers.
I guess everyone's taking a cue from budget, right? Expectation management. Just don't deliver maybe what the street fears, and it's enough.
You'll be fine. Yeah,
you'll be fine. But let's go across to Mangalam. Mangalam, I'm sure we'll hear about the same store sales number, but anything else that you want to point out on the numbers?
Well, Anuj, absolutely in line with what the expectations are, a tad bit above if you must. And another couple of, the two things that really stand out, the one is that the gross margins have fallen to 75% versus 77%. But the other thing is that the employee costs have actually come off to 152 crores, which is versus 153 crore. And that is because the company has been rationalizing operating expenditure going forward. But then again, if you take a look at the valuations, from the valuation perspective, the EPS has come off by about 32%. The net profit has come lower, and over the last 5 years the EPS has fallen from 20 rupees to roughly 9 rupees in the first 9 months of this year. But as of these numbers are concerned, in line with expectations, marginally above if one must.
Okay, thanks a lot for that, Mangalam. We'll come back to you if you get more details on what the same store sales growth has been. But right now the stock is surging. In fact, let's get a view on the market as a whole, including some of these consumption names. ICICI Securities has kickstarted their 3-day conference in Singapore and Hong Kong today. Over 40 corporates are attending their 15th annual Investor Summit. So we're now joined by Jaideep Goswami, the head institutional equities at ICICI Securities, all the way from Singapore. Jaideep, thanks so much for joining us, and what the corporates are saying. For now, we have the market which is reacting to the Jubilant Foodworks numbers. I mean, 13% higher now on that. It just goes to show that, Anuj, this time around, it's not about how you do in your earnings. It's just whether you, manage to hold on to expectations or not.
Yeah, I think, as I said, the same story was there in budget as well, right? I mean, you just went into the event. Positioning in Jubilant Food, Sonia, this morning also was quite weak. Yes, the stock has died, I know, from the low point. But if you go by some of the technicals as well, clearly there were a lot of shorts in the system. And the last 3 or 4 days has been, even if you look at pharma or a couple of IT names, the short covering, because that's where you need to look at right now. Which are the companies where you have shorts and which go into the earnings with muted expectations, and that's what they've done. The numbers are not great by any stretch of imagination, and again, it's an expensive stock. Even at current levels, it's an expensive stock. But the market right now is just willing to give more benefit of doubt.
Oh yes, the market is in that mood. It would be, I think, prudent to also pull up a 1-year chart of Jubilant Foodworks to see which way it's headed, just to give you a sense of how much the volatility has been in Jubilant Foodworks. So today, of course, the stock is up almost about 11% but if you look at 12 months, it's still down almost about 15% or so, and it's lost a considerable amount of its value between September and February. So it's just trying to sort of recover some of that lost ground, not really giving big gains to investors because of the model, there's been so much competition, etc. So all of that has really cut down on their own operational performance. But yes, this quarter is not as bad as the street was forecasting. Let's get a couple of comments on the technicals as well. Rahul Mohinder joins in on the phone line. We have Prakash Gaba here with us. Prakash, any quick thoughts on how to trade Jubilant now? Would you touch that stock at all?
Well, that's why when I look at the Jubilant chart, it tells me still there is upside. It doesn't give me any weakness as such. So why would I not chart? Certainly it looks good to me, and I would say that dips could be bought, can climb to levels closer to around 1135, may take its own sweet time, but yes, Jubilant Food still looks good to me. Only thing, one needs to protect the stock with 940.
Okay, Mitesh, your thoughts on the stock, Jubilant?
See, I think it's clearly given some kind of a bigger reversal, heading towards possibly targets of around 1100 to about 1140 on the upside. So there's still more upside left. The only thing is that you might want to time your entry and refine it a bit. I would have a stop at about 960. So anything close to about 1990 would be a good buying zone. If you haven't, I think buying a 1050 call for the Feb month will still be, I think, a decent trading bet.
Okay. Rahul Mohinder is also joining us on the phone line. So let's get some closing strategies before we get our focus back onto Jubilant. Rahul, hi, afternoon. Any thoughts on what one should be doing in the last hour? It's turning out to be a pretty handsome day of trade.
I think I continue to think that the market will keep its trot up. And, I'm looking at some heavyweights continuing to stay positive. Hindustan Unilever, to name one, I think they're around the current price of 850, 758. One could look at a buy. Potential targets on the stock in the near term could be as much as 885. One could get in with a stop loss at 845 here. We see 845 as a strong support base that's built up for levers. And I think, above all, there's a lot of volume action right there. The fact that it's going past the 200-day averages as well. I think it's all adding up to points that there is potential for more. Another stock I like at the current levels is Cipla. There, of course, we've seen a strong price breakout today after it made a new 52-week high. But I think what's really factual here is the fact that one could get in with a 580 stop loss, targets at 640. Volumes here have been excellent. They've been probably the highest in the last 2 months. So I think all that puts together a great price and volume breakout for Cipla, and that warrants a buy at current levels.
Okay, Rahul, thanks a lot for that. Let's keep our focus on the Jubilant Foodwork stock, because it's off the high point now, but still, by just 1% or 2%. The high point was 1030. Avnish Roy now joins us. Avnish, good afternoon. Your first take on Jubilant Foods' numbers and the fact that the same-store sales degrowth is a bit better than what the market was fearing.
Yes, it is better than the market and our expectation, and we expected this to happen when we saw results of other urban-focused companies. If you see most of the retailers' numbers which have come out, Asian Paints, McDonald's, everyone has reported numbers which are reasonably better than initial expectation, because demonetization was expected to slow down, and there was more focus on buying the necessary items. So against that, clearly it is better than expectation, and that's why I think the stock which had been in oversold territory has reacted to that.
Okay. Do you think this reaction is done now, Avnish, or do you expect more? Because at the end of the day, the business pressures still continue. The revenue growth outlook is still quite muted. So you expect to see more of a relief rally, or you think this is it?
I think from a medium long-term perspective, we remain positive. Although if you see McDonald's in most quarters, Westlife, which has McDonald's, reports better set of numbers in terms of same-store growth than Domino's. So that is one thing which we would watch out. New CEO has joined Jubilant. That is something also which needs to be tracked closely as to what he does in terms of pricing, affordability, the promotions, etc. But I think these burger pizza kind of initiatives, those are a step in the right direction. So from medium to long-term perspective, I think still there is upside, because see, this was a demonetization quarter, and we need to see now in a more normal quarter like Q4, then how the same-store growth comes back. That's very critical.
Okay, so what's your call on the stock for now, and what price target do you have, and would you look to rework this?
Yes, so we'll wait for the con call. So currently we have 1096 as the target price. So from a medium long term perspective, we remain positive on the stock.
Okay, so 1096, and what about your EPS for the full year for FY18? What are you forecasting now?
Yeah, so those numbers we would wait for post-con call, but currently we have around 24.9 as the FY18 EPS.
So it's still trading, as per your current EPS, it's still trading at somewhere around 46 times forward, which is still extremely expensive compared to the rest of the space. Would the high valuations not worry you, given that, there's been no growth this time either?
If you see, valuation of Jubilant has always been expensive. I have the P band, so it has been in the broadly 50 to 60 times P multiple for a large part of its history. So from here, if you see, the margins are still half of what it was 3-4 years back. So essentially, investors are looking whether this is the bottoming out of margin. Of course, margins will improve only when same-store growth is beyond 5 to 6%. So I think this stock is always expensive, more expensive than most other consumer names. It has been in the 50-60p multiple band also when things have been better.
Okay, Abneesh, thanks a lot for your time today. That's an important point that Abneesh makes. Valuation of Jubilant Foodworks have to be compared to its own historical perspective. And in that, actually, let's pull out that plate which was flashing on the screen. That's the big call that investors need to take, especially on FY18, because if you see the FY16 and FY17 picture, it's 63 times. FY18, could it be 44 times? Because that's a significant jump that you are factoring in. For that to happen, you need to go back to that same-store sales growth number as well. So that's the big if. But for now, the stock is surging.
Oh yes, and they have a new management on board as well, right? I mean, he's ex-PepsiCo, ex-HUL, ex-Bharti. So he has a very strong credential with which he's come on board. So I guess hopes are high that he'll bring something on board as well. But that's it about Jubilant Foodworks. Numbers better than expected, and stock is seeing a relief rally. We'll take a break on that note. We still have about 20 minutes to go before the show comes to an end. And to brighten up our Monday on the other side, mid-cap mania with Nigel D'Souza, and the stock on his radar today is an automotive lighting company. More details on the other side.
Welcome back. Well, it's been a strong day for the market, of course. Still up 62 points on the Nifty and about 1% on the mid-cap index. BTSC time, buy today, sell tomorrow. Prakash and Mitesh still with us. Prakash, you go first.
Yeah, I like Aurobindo Pharma. That looks good to me. The way it's trading looks like Aurobindo Pharma can climb to levels closer to 715, 720 zones. Stop below 695. Second stock that I like is HUL. Seen a good up move. Momentum seems to be picking up. The target is around 870, stop below 850.
Okay, Mitesh, what about you?
So two stocks which have underperformed and are trying to catch up. One of them is Just Style. I think 5.5% up today. That's a buy with a stop at 397 and look for targets of 410, 411. And Wockhardt Pharma is a good BTST as well. Keep a stop just below 708, 707 and look for 725, 730 as the target for tomorrow.
Okay, thanks guys for that. Well, we'll come back to you for the last 10-15 minutes of trade. But before that, it's time for our Monday special Mid-Cap Mania with Nigel D'Souza. And we will focus on an automotive lighting company which is co-promoted by a Japanese major and focuses mainly on passenger vehicle space. Well, all the right ingredients. The stock is at a 52-week high and buzzing in trade today as well. It's up over 5% at the moment. Nigel joins in to tell us all about the company that he's done research about. Nigel.
Well, Sonia, I listened to you very, very carefully, and in terms of auto anchors as well, this is one stock that came on my radar. As you said, the stock is already buzzing in today's trading session. It's trading at a fresh 52-week high, if I'm not mistaken. It's at the high point of the day. What does it do? It's an automotive lighting company. In fact, it has close to 9 plants all across the country, and it has research and development centers both in India as well as in Taiwan. That's basically the background of what exactly the company does as of now. Just to tell you what they do in terms of automotive parts, we should get up a couple of clips. They produce it for various companies, and in fact what they produce looks like this. You know, that cap on top of the lights, that's what they are into. And also they have a whole host of clients. So Maruti is one of their biggest clients. They also service the likes of Hyundai, Hero MotoCorp, etc. So Maruti and Hyundai, they are some of their biggest clients as well. Now, moving on then, as you mentioned, in terms of shareholding pattern, The promoters hold close to around 73-74% stake in the company. Stanley Electric, that's a Japanese company which has a turnover of more than 25,000 crores approximately. That in fact has 37.5% stake. And the DK Jain group has the remainder, 36%. In terms of funds that hold stake in the company, we have Fidelity North Star Fund as well as Param Capital. Both of them hold close to around 33.5% between them. Then if you just take a look at the financials, well, on the top line, nothing so great. The growth has been, they should do around 950 crores. Now they're doing in the last year close to around 1,200 crores, 1,250 crores approximately. But their operating profit, that has doubled if you take a look at it in the last 5 years approximately. They should do around 45 crores. And now, in fact, just in the last year, they're doing 88 crores approximately. The margin picture as well, they used to do around 4.5%. In the last year, they did more than 7%. And even in the first half of this year, particularly in the last quarter, they have been, maintaining that kind of a trajectory of more than 7.5% approximately. In terms of profit, it's moved from around 12 crores to around 36 crores. So the operating profit and the profitability, that has looked good. Obviously, there could be some reduction in finance costs, and that's perfectly depicted in their debt to equity ratio. At one point of time, it was more than 1.2 times. The last disclosure as per the company, it's come down to around 0.17 times. In terms of ROCE as well, that is looking very good, particularly in the last year. Now it is at more than 23%. So that as well is another positive. But just to focus on, I was talking about the tie-up they have with the Japanese company. If you take a look at their associate company, they also have a tie-up with a Korean company. And that, in fact, is known as SL Lumax, or their Lumax. That's a listed entity, has 21% stake. The remainder is held by by the Korean company, that's SL. And the profit number of around 36 crores, close to 15 crores came in from this associate itself for that 20% stake. So that's telling you that that unit is doing very well. And that unit is catering to the Hyundai unit mostly to Hyundai. It's situated in Chennai as well. Now, that's the breakup for you. 37 crores, 15 crores coming in from the associate itself. And in the first half of this year, they have already done 10 crores. So if you go by that run rate, then maybe they can do even 20 crores for the full of this year. That we'll have to see for the second half of this year. Well, key triggers going ahead. Majority of its revenues coming from the passenger vehicle segment. Sonia has been telling us that passenger vehicles have been doing quite well. So that's one of the triggers. Maruti is the biggest client. Maruti is going to be starting production in Gujarat. So that unit that they had set up for the Nano, that didn't really get up and going. They're going to be investing close to around 100 crores there. So that's the second big trigger. And finally, they're shifting towards LED lighting as well. That is higher margins. And in fact, currently it's only lower single digits. They're aiming to take that up as well. So keep your eye out on those three main triggers. In terms of valuations, on a trailing basis, it's more expensive than FIAM. And everyone knows that FIAM has been a big outperformer in the last few years. Finally, what are the challenges? If there's a slowdown in the passenger vehicle space, well, then that's not very good news because Maruti is a big client and majority of their sales come in from the passenger vehicle space. High dependence on Maruti. Every time there has been a shutdown, breakdown, F514, for example, numbers didn't look good. That's a challenge. And finally, the technical tie-up with global players. What if something goes wrong over there? Interesting stock. It has been buzzing. In fact, if you just take a look at a wider time horizon, the stock has done very, very well. Keep your eye out on this one. Back to you.
Okay, thanks a lot for that, for enlightening us about another auto ancillary that's had a really good run up until now. Remember, these are not stock recommendations at all. This is only proprietary research done by our colleague Nigel D'Souza. Well, that's Lumax for you, but moving on, there are plenty of other buzzing stocks in trade at the moment. Varinder joins us now to give us that list. Varinder, over to you.
Well, let's start with some of the stocks which are reacting on the positive side on back of results. Look at Panyam Cement up 20%, West Coast Papers, NGL Fine Chem and Shishasai Papers all doing well. Results on the downside, all these stocks didn't report good set of numbers. FDC, Gokuldas Exports, Axel Industries, Atlas Cycle have been hitting down circuit since last many days, and Quick Heal. Some of the new names which are popping up today like Goldstone Infra, Indian Toners, Alu Fluoride, Sadhana Nitrochem, Madhav Marbles, Joinder Capital Services, Swiss Glasscoat Equipments, and Cellub Industries. Some other small cap gainers, look at Peninsula Land, that's surging up today. Next Media, Websol Energy, Walchand People First, all these smaller cement companies and sugar companies, they are moving up together. Andhra Cement, Taich Industries, Arshia International, Gujarat Ambuja Exports, Ashiana Housing, Flex Foods, all the sugar companies like KCB Sugar, Uttam Sugar, Thiru Arunan, Andhra Sugar moving today. Jindal Stainless SR and Jindal Stainless also moving. Associated Alcohol, Prakash Industries and Tenfec surging nearly 5-10%. Some of the mid-cap gainers, Aegis Logistics, Laurus Labs, SDL, Purvankara, Bajaj Finserv and Prabhat Dairy. There's one more news which came in that the Supreme Court has told some of the companies who use pet coke that will be banned in the next 2 or 3 weeks. So keep an eye on some of these natural gas producers. I believe IGL is moving up, which is up nearly 3-3.5%. And also keep an eye on Petron LNG, which is another natural gas player.
Okay, Varinder, thanks a lot for that. The market is strong, no mistake about that. The Bank Nifty up almost 200 points. Our closing bell money control question of the day is related to market. Do you see the market hitting new high anytime soon? Log on to moneycontrol.com and post your responses, and we'll read out some of the most interesting ones post 3:30. We'll take a break and be back with the market closing.
Hi guys, welcome back. We're just rounding up what has been quite a good day of trade. So up about 0.6% for the market and holding on to that 8800 on the Nifty and 28,400 on the Sensex. Neeraj Diwan joins in. We have been in conversation with Mayuresh, Joshi and SP Tulsian. So let's get a couple of comments from all of them. Neeraj, hi, good afternoon. The space of the day undoubtedly has been cement. Of course, in ACC and Ambuja, we understand that there could be a merger on the cards as well. That Lafarge Holcim could be looking at. How do you see that play out, and what's your view on how to approach both ACC and Ambuja now?
Yeah, good afternoon. I think cement as a space should continue doing well, because I think volume growth there will continue, and we like more players which are either pan-Asia presence or with just south or east focus. So among the picks that we like one is Ultratech Cement, and other would be India Cement. I think India Cement on valuation parameter is quite attractive even after the run-up that we've seen there. And then coming to the merger which may happen between Gujarat Ambuja and ACC. So we still need to see the details of how this is going to pan and what are the basic fine print about this. But I think after the merger, there will be a lot of operating efficiencies, and I think Gujarat Ambuja Cement in that category can really do well going ahead. So one can look at investing Gujarat Ambuja Cement even at these levels.
Okay, Neeraj, hi, good afternoon. The stock that's carried Bank Nifty today is ICICI Bank. Your thoughts on that stock?
Yeah, we actually like these private sector banks, and mostly banks which have a corporate exposure. So ICICI Bank really fits that bill very well. So I think going ahead, because the interest rates coming down, and a lot of these, their loans start becoming serviceable, and there can be a lot of recoveries and a lot of improvement that can happen there. So ICICI Bank, even after the run-up that we've seen today, I think is still a stock which should be there in your portfolio and should be bought in depth.
Okay, Mr. Tulsian, before we wrap up, one stock that you have been bullish on for a while in the auto ancillary space is Bharat Forge, and today once again it's done well on the back of good numbers coming in from North America trucks. At this price, how are you positioned in that name?
Sonia, I've said that when the last month, we have seen the dull numbers, that at that time I've said that this is the time, you should enter into such stocks, because when you see the good numbers coming in of the North American truck sales, the stock starts moving up. Because I have been keeping a very positive bias on the stock, because if you want to trade from a near-term point of view, maybe with a view of about 15 days to 30 days, then probably these data are relevant. But once the stock having moved up with the good sales numbers having seen from North America, I think one should wait. Maybe when the stock corrects by about 30-40 rupees, that should be an entry point, and I am holding a quite extremely positive view on the stock from medium-term point of view.
Mr. Tulsian, Dwarikesh Sugar has been a 10-bagger since your recommendation, but what next? Is the sugar cycle still there for someone to play the stock?
See, Anuj, if you rely on the production estimates, I don't think that the production is going to be. ISMA has estimated at 213 lakh ton, 213. I don't think that the production is going to exceed more than 200 lakhs. And if you see the closing stock which the industry people have been talking guardedly, they are taking that as 77 lakh ton or maybe 7.7 million, which I doubt that it is more than 7 million. So add 220 million and 7 million, 27, you will be having consumption of 25 million. Probably that may not be able to meet the requirement of October months, because the season is ending on 30th September. We are estimating all these figures by then. I am in fact sometimes scared, maybe that I won't be surprised to see the sugar getting sold in the month of October around Diwali, because this time Diwali is in middle of October. I won't be surprised to see the sugar getting sold into the retail at closer to 48 to 50 rupees, and that will definitely be very scary. So maybe that will be seen giving a gain of about 30-40% from current level. And as you have said, Dwarikesh having risen by 10 times post my recommendation, if you see a rise of 30-40% also, it will grow by 13-14 times. So I am extremely bullish. If you see the Awadh sugar numbers which have come out about an hour back, probably that was the best results I have seen amongst all the sugar stocks having reported the numbers till now, followed by Dalmia Sugar and then Dwarikesh. In fact, if you want me to say that which are the three best numbers, these are my pecking order: Awadh, Dalmia and Dwarikesh. So I am keeping a positive stance on the UP based sugar mill only. There is no point in playing on the other state sugar mill. Though in Tamil Nadu, just as a matter of record, let me say that the sugar prices have moved beyond UP prices. If you recall, Maharashtra and Tamil Nadu always used to rule 2 rupees lower than what it used to rule in the UP. But now UP is ruling at 37 rupees per kg, while in Tamil Nadu it is ruling at 39 rupees per kg. So that indicates the scare situation prevailing in the central and southern part of the country.
Okay, let's just recap the day. It's been a good day for the bulls. No complaints at all. 8800 is where the Nifty is closing. The Bank Nifty is closing 180 point higher. The Bank Nifty didn't have the kind of trend day it looked like it will have after first hour, but mid caps compensated for that. In terms of stocks, well, lots of big stocks moved today. ICICI Bank was up 3%. Sun Pharma moved 4%. Aurobindo was up 3%. Ambuja and ACC both were higher by about 4%. Of course, Tata Power, Hero MotoCorp, Axis, Eicher Motors, ITC. So bunch of heavyweights. Today was more of a stock-specific move rather than a sector-specific move. It was broad-based in nature because two of the large pharma stocks did well, but two of the large pharma stocks were the biggest losers as well. Dr. Reddy's and Cipla, that is. ONGC as well was down about 1%. But the mid-cap rally just continues unabated.
Oh yes, it does. And in fact, the stock of the day undoubtedly was Jubilant Foodworks. Numbers not as bad as expected. Big relief rally in that stock, and it goes home with almost a 10% gain. A lot of sugar names have been rising. Domestic sugar prices have risen to 2-year highs. International sugar prices have surged. So look at these names. Rana Sugar up 17% today. Sri Renuka up 15%. Bajaj Hindustan up almost about 10-odd%. So space has been gaining a lot of ground. JP Group stocks also, JP Infra, JP Associates on the possibility of a deal, JP Power up about 6 to 10-odd%, so that space looked very good. And Adani Group stocks as well, so Adani Enterprise is up about 2.5% and Adani Power up about 1.5-odd%. On the downside, OBC has been under pressure all through the day. Jet Airways, I didn't see how that stock closed because it started off in the red. It still goes home with losses, but it's trimmed some of its losses, so that stock is down about 0.3%. The management commentary was quite cautious in the conference call held about an hour ago. Relcom too is down almost about 2-odd%. But we wind down the day's trading action. It's been a good start to the trading week. Tomorrow is an interesting day because we have a lot of big numbers coming in. There's Tata Steel, there's PNB, BHEL, Titan, CEAT. So big numbers coming in tomorrow. Mayuresh, you track a lot of these stocks in the broader markets that will come out with numbers, the likes of Titan, CEAT, etc. Anything that catches your eye that one can perhaps buy into or increase allocation to?
So structurally, Sonia, I think these stories are looking very, very lucrative from a long-term perspective. However, I think input prices in the case of tire companies like CEAT and the demand outlook thereof, specifically in a scenario like demonetization where the replacement market might have got hit. But the numbers are contrary so far. So largely, again, I think we're looking out for results like a CEAT and a Titan. But what has impressed me so far, I think, in the mid-cap base is a company called KEI Industrial Cables. The stock had moved up significantly in the last week. And if one goes by the management commentary and our own estimates as well, we are presuming a 14% growth to take place over the next 2 years. Export languishing at 8%. Exports can jump up to 14-15% over the next 2 to 3 years. A large part of their term loan debt of close to 190 to 200 odd crores is expected to get repaid over the next 2 to 3 years as well. There is no capex on their books planned for the next 2 to 3 years. So I think there can be a robust top line growth. Margins can be sustained. And the interesting fact here is that the EPS for FY16 was 8.1 rupees. 9 months FY17, the EPS is already 8.9. Going by the run rate, I think an 11.5, 12 rupees EPS can be posted for this year, around 15 rupees for next year. The 15% top line growth, debt reducing, I think there is still ample value left in the company. So any decline, I think KEI becomes interesting, but I'll watch out for results of CEAT and Titan as well.
Okay, Neeraj, it's been such a big bull market for mid caps. Anything that you're bullish on after the number?
Yeah, actually, some numbers which came, one was TCI and the other was Equitas and Ujjivan. I think they came out with a pretty good set of numbers. TCI showed good improvement as far as margins are concerned, and their top line growth also has been pretty decent. Especially the supply chain management business has shown good improvement because the auto growth, which is in the supply chain management business. So TCI would be one which would be a good pick among the mid caps. And Equitas and Ujjivan, the small finance banks, they also came out with a decent set of numbers where the asset quality actually improved. So I think these were the ones which out of the results which we picked to do a good one for investment even for the next couple of years.
Okay, thanks for those ideas. We'll need to take a break on that note and thank all of you guys for joining us. Well, with that, we will wrap up with this segment. Good day for the market. The Sensex and the Nifty go home at 5-month closing highs, and it is a record closing high for the mid-cap space. So it's been a fairly good run that we've had post the budget. Our closing bell money control question of the day.